Welcome to ShortView Trading. This is your morning market hit for Thursday, 4th of February. What matters today for traders? Well, in the long term, equity markets are all about the fundamentals. Stock market direction is driven by economic growth and earnings growth. In the near term, none of that matters. Markets are about positioning, and in particular the ebb and flow of two important emotions, fear and greed. And it's when markets get greedy that they become vulnerable to the downside. And often the reason they're getting greedy is because they're pricing in and anticipating good news. And that's why the market often tops out on good news. They're forward looking, they anticipate and price in positive outcomes before they even happen. The US equity market, for example, rallied ahead of the 9th of November vaccine announcement. Levels of greed were building. It then popped higher on the news. But that marked the end of the rally. The market sold off into the close on 9th of November and then simply traded sideways for the rest of the month. In other words, markets didn't keep moving higher after the news announcement because they'd already become greedy. The buying had already been done. And really that's how our short-term risk appetite indicators work. They measure fear and greed in markets. When positioning in markets becomes fearful and there's lots of selling, like in late October, our models move towards buy levels. Then as markets get greedy, as they did ahead of that positive vaccine announcement on 9th of November, our models move up towards sell levels. In a similar way, our short-term models have been timely in this pullback. Usually those emotions of fear and greed are particularly prominent when markets are selling off. And so signals from our models are timely. They're useful in navigating the waves of the pullback. Typically, as you can see from this chart, there's normally an initial leg of selling, wave one, then there's a wave two relief rally in which a portion of the losses from wave one are retraced. And then there's typically a third and final wave of selling in which the equity market either tests the lows from wave one or indeed breaks meaningfully below them. So we're closely following the signals from those models. We update them every day, as well as our 1 to 2 week trading recommendation on US equity market futures. It's all in our daily trading publication available on the website. What else are we watching today? Well, we're pretty light on data and events. Out of the UK, we've got the Bank of England at midday. Out of the US, we've got Fed's daily making comments. Really, tomorrow will be key. Non-farm payrolls out of the US, all eyes on that. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and Facebook. Thanks for listening.